Cathie Wood is going to talk in depth about the current market conditions and give you all a lot of very useful information about the federal government's tax cuts, price projections for the future, the rolling recession we've been in, and the very bullish market conditions she thinks we're going to enter in the future. All of this will be very helpful for all of you back at home. So let's not waste any more time and hear what Cathie has to say. This slide is also very important. It shows what the Laffer curve looks like. There will be more money coming in when taxes are lowered if they are too high. Why does that happen? Tax loopholes and other ways to avoid paying taxes are no longer used by businesses and people. I didn't say stay away. That is not allowed. I told you to stay away from taxes and find ways to get around them. You can look at the history of the business tax rate here. That's the black line over there. Things have changed over time, which you can see. We've had different income tax rates since the early 1900s, so this isn't new. You can also see that tax payments weren't well kept track of until the late 1940s. Of course, it's clear that tax rates have gone down a lot in the last 60, 70, and 80 years, since the low 1940s. The amount of money the government gets from taxes is at an all-time high. Low tax rates tend to boost growth, and people pay their taxes more often when they do. Now, what does this have to do with cryptocurrency and why is it so important? A lot of you have asked this question and I'm going to answer it now. This map shows very clearly that lower taxes help the economy grow and get things moving. I want to show it to you all one more time. Why is this important now? So Donald Trump wants to lower taxes even more because trade money is coming in. The man can actually afford to do this, and it's likely that this will lead to the federal government getting more real business income taxes, which is huge. Less people are dodging taxes, so the government gets more money. Cathie, you're not avoiding taxes. What it said was going to be a huge deal, and you can see the growth. It's completely crazy. In the middle of the 2010s, right around here, we saw a big drop in taxes, which was followed by huge rises. The real amount of corporate taxes paid went from 200 million to 500 billion, which is a huge jump. A lot of money here. That's a crazy rise, growth of almost 3 times that in just 5 or 6 years. That makes no sense, okay? And it's easy to see that back in the 1900s and 950s, the business taxes that were actually being collected were very low. At the same time, taxes were the highest they had ever been. It's too bad there are no numbers for the 1920s and 1940s, but this is still very important to remember. Also, we're in what's known as a rolling recession right now, but I think we'll be speed rolling right out of it very soon. I also think this will be very big for the cryptocurrency market. It's interesting to me to think about what Cathie would say about this event and what she and ARK Invest think will likely happen in the markets. Let's play this quickly. In the first quarter, we heard from a lot of companies. In the second quarter, we may hear from a lot more companies. People are waiting to see what happens with the taxes and the budget, which has caused some spending to stop and not move. There will probably be a lot more talk about the decline. And what we tried to show in the letter is that while many economists and strategists may be talking about the start of a recession, we believe that the last sectors to give way are those that have been keeping the economy going for the past 3 years, bringing us positive GDP growth and, more importantly, job growth. The wealthy person and the government. This is the first slump for the government in 30 years. We didn't have a government contract since Newt Gingrich led Congress to be more responsible with money during the Clinton era. So let's begin. This chart, which shows the Fed funds rate, is one reason why we talk so much about this rolling recession and have done so for the last few years. Now, this purple line shows the real Fed funds rate, which is the rate that the Fed wants to see. It's almost at the same level it was in 2007 and 2008 before the great financial crisis. And you can see it's just starting to fall over. What you see in green is the most important part of this picture. This shows how fast the Fed funds rate changes. The Fed raised rates 22 times in 16 months from early 22 to early 23. That's what this shows. After 16 months, 22 times. In all of history, this has never happened. There has never been anything like this in the history of the Fed funds rate since 1913. We're going back to the 1970s or going through the 1970s. A lot of people have laughed this off by saying, oh my gosh, we were starting from 0.25%. The rate was really low. It doesn't really matter. Even though it was a very low rate, the world, especially the US, had grown used to very low interest rates in 2007, 8, and 2009, so this huge jump was a surprise. When we look back at what happened in the 1970s, we can see that people got used to inflation and interest rates going up over time and changed how they lived. When decisions were made, they took inflation into account in a big way. A lot of decisions are made with interest rate hikes in mind. This time that wasn't true. This was a big surprise, and we think it was the start of the slump. We'll also talk about what that rolling decline looked like. To wrap up, let's talk about monetary policy one last time. The velocity of money is the rate at which money changes hands. You can see that it has been going down since the late 1990s, which was the height of the tech and telecom bubble. That boom led to the creation of a lot of new technologies that have been deflationary and helped keep inflation low for the next 20 to 25 years. Then there was COVID, which caused a complete drop in speed because everyone thought the world was going to go into a slump. That's why there wasn't any spending. After that, there was a huge fiscal and monetary boost, which sped up both the growth and flow of money. If we're right, though, the speed of money will change again here. In fact, it has already done that. In order. In the first quarter, it went down. In the fourth quarter, it was pretty flat from one quarter to the next. The year-over-year change is about 1.4%, as you can see here. That seems right, but if the number drops one after the other, it will put pressure on the number that changes from one year to the next, which will slow down total speed. That really slows down the economy. The Fed doesn't have a lot of room to move here. Finally, the market is getting it, and they now expect the Fed funds rate to be cut 4 times this year. Okay, that being said, this is very important information because one of these 4 cuts could happen today if they do happen. Is going to be big. That is, we can already see what happens when rates are lowered in Europe. In any case, they did this a few weeks ago, and now the markets are starting to mirror that. 6 to 8 weeks after a rate cut, the money supply usually starts to rise. This, of course, makes more people want to spend. We've seen this affect the price of XRP, Bitcoin, and a lot of other digital assets over and over again. So now is a great time to be an investor, because if these 4 rate cuts happen this year, they could cause pretty big price changes across the crypto market, maybe even bigger than what you'd see if Europe and China lowered their rates. This is because the US has the biggest economy and the most invested in cryptocurrency. This means that more money in the hands of Americans means more money that's likely to flow into XRP, Bitcoin, and all cryptocurrencies, especially American ones, because Americans like to support American products. XRP and XBAR are just that. Those are the ones I'm looking at right now. Which is why I'm so excited about all of this economic boost. That's exactly why I'm trading around it too. In Crypto Crusaders, that's what we do. Wonderful trading group with a wonderful community behind